Okay, let's get right to it. You're going to see this headline everywhere. KOSPI crashes almost 3%. Ignore it. That is not the real story. What we actually witnessed was a mechanical deleveraging, driven entirely by macro factors. And that gives us a very specific, tactical map for the US session.
So what kicked this whole thing off? Right here. A massive minus 2.1 trillion Korean won net foreign sell-off in the KOSPI spot market. That is the shock number.
All right, let's break down what just happened over Seoul. This was, without a doubt, the defining event of the entire Asian session. A punishing drop, nearly 3% down, and on the surface, you'd think, wow, pure panic. But look, the headline, it's noise. It is not the real signal.
So this is where we really have to dig in. It's not just about the fact that money moved out. What's absolutely crucial for us is understanding how it moved. We have to decode that flow. And that leads us to the central question, right? Was this some kind of aggressive, speculative attack, with big players betting on the market to crash even further? Or was it something else, something more structural, moving behind the scenes? Okay, now look at this. The data here tells a completely different story. It's a major contradiction. On one hand, yes, foreigners dumped a massive 2.1 trillion won in the spot market. But at the same time, they were actually net buyers in the futures market. And get this, the amount of short selling, it actually went down. That is not, I repeat, not the footprint of a speculative attack. This is a clean, structural exit. It's a different beast entirely. And this slide just lays it all out perfectly. You see the broad index, the beta, absolutely collapsing. But smart capital wasn't just running for the hills. No, it was rotating. It was moving into these critical supply chain nodes. Just look at LG Energy Solution, a huge player in the EV battery world. They saw a signal activation of plus 3.93%. That's not panic selling. That's capital actively seeking strategic refuge. So if it wasn't fear or panic, what forced this huge structural exit? Well, it wasn't sentiment. It was the convergence of two very specific macroeconomic triggers. Here they are, the two kill switches. First, Brent crude pops above $100 a barrel. Second, the dollar-to-one exchange rate blows past the 1,500 level. When both of those things happen at the same time, boom, a deleveraging switch gets flipped inside global portfolios. You have to put yourself in the shoes of a global fund manager. This combo is just toxic. Think about it. Your energy costs are skyrocketing, and the currency of your assets is tanking. It creates this vicious feedback loop that just eats away at your net asset value, your NAV. At that point, you're not even trying to make money. You're forced to sell just to protect your denominator. It's mechanical. And this kind of forced selling, it has a specific name. It's a classic textbook example of a market mechanism that we track incredibly closely. It's called a long unwind, and it's important you get this right. This isn't some trader getting a gut feeling and slamming the sell button. It's a mechanical, almost automated response to a major shift in the macro regime. The whole point is just to get risk off the table. Let me be crystal clear on this. The motive here is one thing and one thing only: capital preservation. They're just closing the door on positions they already have. They are not building a new bearish case. So that brings us right to the doorstep of the US Open. And here's the conflict, the big question we have to answer. Is this deleveraging we saw in Asia a warning shot, a precursor to a US sell-off, basically a bull trap? Or was that big KOSPI drop just a localized currency shock that the US market can just shake off? Command mode activated. The analysis phase is over. We are now transitioning to pure execution. Here is the battle plan for the US session. The levels are precise. The actions are not ambiguous. Remember the rule. Do not trade the headline. You trade the supply chain. Eyes on two pivots. For NQ futures, the line in the sand is 23,093. If it breaks below, we're testing that 23,000 psychological floor. For Brent crude, the number is $110. A break above it, and stagflation risk goes way up. A move back below it, the entire deleveraging signal from Asia is invalidated. It's really that simple. The bear case. It's confirmed if Brent retests 110 and NQ breaks 23,093. The implication is simple. The deleveraging is coming to the US session. Your action is absolute. Cancel all buy-on-dip orders, no exceptions.
The bull case. This scenario holds if NQ maintains support around 23,100, and critically, if the US 10-year yields stay below 4.45%. If that happens, it means the KOSPI drop was just a localized shock. The action there, it allows for a technical bounce in US tech.
All right, final execution checklist.
Watch pre-market volume on NQ. That's your confirmation. A break on high volume confirms the thesis. If the volume contradicts the price move, if it's weak, you invalidate the thesis immediately.
Log the result at 0630 EST. No exceptions. The process is the edge. To get this intelligence from the Asia close before the New York Open, make sure you're subscribed. Be here.